Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, let's start with Wall Street, where stocks overnight were lower for the most part. The S&P and the Nasdaq did cross into positive territory a couple of times, but closed down while the Dow was flat. This week, investors, for one thing, will be watching data on U.S. consumer prices. What's the story in the global markets?
Yes, on the regular trading day of Monday, if you look at the Nasdaq composite, it fell by about 0.58%. S&P 500 lost 0.37% after both index erased earlier gains and sold up into the close. The Dow Jones, meanwhile, ended slightly up, or pretty much flat. The communication services were the worst performing sector, given that the Meta platforms continued to fall, and it showed 5.14% drop after the results release, and also concern about the Europe operation. The notable decliner include Alphabet, Google, PayPal, and also Snap. Given the fact that the Alphabet and Snap had a very strong rally, the PayPal continues to be concerned about the market share in the future. Also, meanwhile, the Proton, which is expected to be taken over by one of the major IT companies, including Apple or some another company, it showed a huge surge in share prices by 20.93% yesterday. Most of the people continue to be concerned about the overall interest rate hike, given the fact that inflation data is expected to show 7.3% on Thursday, which is rising from 7% year-on-year growth rate in December. Continuously, the inflation pressure makes people uncertain about the Fed monetary tightening, which the speed is currently expected to be about 5 to 6 times this year. Obviously, that has risen quite significantly from previously towards the end of last year. We were thinking about 3 times rate hike this year. Overall, in terms of the U.S. futures market, however, though, it shows somewhat of a rising trend because a lot of people are already taking in that consideration of inflation pressure, that the economy seems to continue to be doing reasonably well, and overall sales numbers are looking quite positive for most of the U.S. companies, where S&P 500 showed very strong fourth quarter results so far.
Right, and today Korean stocks also started out higher, but this afternoon the KOSPI turned south and closed just about flat. Volume appeared to be fairly moderate at the end of the day, but it doesn't seem like there was a clear direction, even though a number of companies are reporting strong earnings. Tell us about the domestic market.
Yes, if you look at the KOSPI, it was slightly up, but that's pretty much flat, up 0.05%. Nasdaq is down by 0.46%. Main reason for that kind of weakness is because we are looking at the options close on Thursday, and on top of that, as I said earlier, we are expecting the CPI number from U.S. on Thursday. So clearly people are quite uncertain until the numbers are released. If the market is going to take a trend to show upward, then it has to have that kind of numbers coming out or in the future. So as long as that uncertainty lies around, that causes some of the uncertainties, and it seems that the foreign investors and local institutional investors are continue to be major seller of the market. Also, if you look at the Korean retail investors, they seem to be pulling out money from their investment accounts to reallocate its money to safer options, such as money market funds, etc. And also, if you look at the credit-backed loans for stock investment, which stood at around 21 trillion won, which is about 17.5 billion. That is down by 4 trillion won from a record high of 25 trillion. Even that number is very small. Continuously, people are quite uncertain about the direction of the overall market right now. In terms of the earnings, yes, we are seeing quite positive numbers coming through from the corporation, but continuously, the Korea seems to be one of the lowest dividend payout ratio country in the world, and therefore people are uncertain about whether or not the earnings are going to be the ones that pay back to shareholders. So continuously, the discount or uncertainty about investing into the Korean equity seems to be the major uncertainty at the current point in time. And usually the Korean market tends to be in a box range right before the COVID-19 at around 2,000 level. Now it's around already 2,700 level. So people are uncertain about the direction of the Korean market for the time being.
Well, zooming out a bit, in January, we see that Korea's foreign currency holdings were down for a third month in a row. Compared to the month before, holdings were down by more than $1.5 billion. That puts the figure at just under $470 billion. This is in all kinds of things, including deposits and securities. What's causing this figure to decline now for a third month?
Right. South Korea's foreign reserves shrank for the third straight month in January due to a decline in dollar converted value of holdings in other currencies. Central Bank have said that on Monday. If you look at the total number, it came to 461.5 billion as end of January, down by 1.6 billion from the previous month. This is third straight month that showed a foreign reserve declining. But of course, that number is still quite ample. We're not too concerned about the foreigners selling out of the Korean market and causing any kind of uncertainty in terms of the external debt versus the foreign reserves, which was a major concern in the IMF crisis period of 1997, 1998. Of course, though, given the fact that the Fed is showing a trend of tightening monetary policy, which is expected starting March 16th of this year. Of course, foreign investors are quite uncertain about investing overseas, and obviously Korea is one of the overseas investment. And also, as I said, on top of that, we are uncertain about the dividend payout ratios and shareholder friendliness, corporate governance issues, all that applied foreign reserves rising trend it's not going to be happening anytime soon on the basis of tighter monetary policy by Fed in the U.S. and also most of the other central bank in the world.
Well, finally, Mr. Yu, we've discussed this a number of times before, but we've been seeing this huge increase in government debt. Finance Minister Hong Nam-gi said today that this is a concern for Korea's sovereign credit rating. What kind of risks do you see out there? And in general, what do you make of the situation?
Well, I think that, given the fact that the government is focusing on the consumer debt level, and they continue to try to manage the household debt, and obviously that's the way that how they're handling it is by providing additional supply for the housing market and also raising interest rate by 1.25%. And all that means is that tighter money supply in Korean economy. However, though, if you look at the overall debt level, Korea continues to remain one of the lowest level of debt in terms of the government debt and also in terms of the corporate debt. It's the problem area is once again, it is a consumer debt area. So yes, it is uncertain and yes, it is a concern. But we think that the overall total debt level is not that troublesome relative to any other countries. So we need to somehow manage that. And the best way of doing that is trying to lower the tax rate and have more income given to the retail investors or retail who are earning the monies. Without that, we think that this kind of skewedness of the debt level of consumer will continue to remain to be high. But obviously, the government is not going to lower tax rate at this time. We already know that the tax rate of Korea is kind of highest level for the retail people on the basis of the country-by-country basis calculation. So I think that I don't understand the fact that how they're saying that the government debt level is rising so fast and they need to tighten. I think that they need to use more fiscal policy to improve, which means that they need to lower the tax rate in order to have competitiveness of the retail individuals. So I think that, yes, it is a concern, but I think that the focus that government right now making seems to be too much towards the government debt, which is not necessarily a problem.
Got it. All right, Mr. Yu, we appreciate your perspective, and thank you as always for sharing your time with us.
Thank you very much.